What's going on, good people? Appreciate you tuning in again. Just giving this quick Robinhood journey update. It has been just a little over 2 weeks, so I wanted to give everybody an update, see what sort of where we're at and what's going on. I have made a couple moves since the last update. As you see on the screen, on the last update, which was April 9th, the investing balance was $2,793.67. Now we're at $4,543.64. I did want to add just a quick update since the last time. I am still waiting on the fractional shares and the drip to come through. So with Robinhood, there's a pretty large demand. You sign up and essentially just get put on a waiting list, and I'm still waiting. But I am looking forward to that being set up on my account. With that said, I just want to interject by saying this is in no way, shape, or form me giving you professional advisement of any form. I'm not a licensed professional. Regardless what you see on YouTube, even from the licensed professionals, I do think that you should always do your own research, look into things yourselves. Never pour money into something that you don't understand yourself. And I think the fractional shares and the drip are essential. Those are huge. Fractional shares for new investors or folks that may not be familiar with this and what fractional shares and drips are. Fractional shares, a lot of people, that's one of the misunderstandings about investing. A lot of people think you have to have a whole lot of money to invest into the stock market. So a lot of people, that drives a lot of people away right there, when it's simply not true. Gone are the days of you having to have a boatload of money just to try and make some money and make your money work for you. So those fractional shares are powerful, simply because, if you look at, a random Nike, for example, one share of Nike is sitting at just over $88 per share. Well, if you do not have the $88 to purchase the whole share, fractional shares allows you to buy in to get parts of stocks starting at $1. Again, starting at $1, uno. So I think that's powerful because you don't have to have this boatload of money. You don't have to have all this to be able to set aside right now to invest into the stock market. So that's powerful because, again, you can invest that $1 and purchase a piece of a share of Nike. And as you, over time, continue to grow that dollar and add more to it, whatever the value of that stock is at that particular time, it'll automatically convert that your parts or fractional shares into a whole, which is the whole share. So I think that's powerful. And as you climb that ladder, or even if you invest that dollar, that directly correlates with the performance of the stock. Meaning, if that stock, the value of that stock in that particular company goes up, so does your interest, your vested interest. So you can still gain and not have to put that, in that scenario with the Nike, not have to put that whole $88 in immediately. You can work up to that, but you're still being able to take advantage of, any increases in the value. So I think that's powerful. And then for me, I mentioned, you guys already know, my focus is to build a dividend paying stock portfolio. For me, I think over the long term, it's all about having that discipline, staying focused, consistent, and working the plan. But over time, the dividend payouts, I would like for them to, either supplement or come close to affording me a level of passive income coming in that allows me to take care of bills and things of that nature. Even now, as you receive those dividend payouts, that's real money. So you can take that money out if you like and use that to pay bills, get gas, what have you. For me, and bringing it back to the drip, that drip feature that hopefully will be set up on my account in the near future, all that does is once you get those dividend payouts, say For example, Nike's, since we use Nike before, Nike's dividend payout, they pay quarterly. Once they pay you out, instead of you just taking it out to, use it for whatever reason, that drip function allows them, it sets it so it automatically reinvests that dividend payout. So that way your money continues to work for you, and that you allow that compound interest over time to build up and really work for you. So you're reinvesting into a company without really having to work for it. Again, that's my focus with my, with this particular portfolio. I did add 3 new stocks to the portfolio, and we'll get into those as we move along and give you this quick update. I apologize for the long rambling, but I did want to throw those out there a little bit. And then at the very end of this video, what I will do is give you a quick snapshot at 5 stocks that I will be adding to the portfolio and buying during this pandemic, and again, just broadening the horizon of the portfolio. And I think they're really solid companies. And again, that's what it's all about: doing your research and then invest into good companies. That's the most important thing. I know people look at the current state of the market, this bear market, essentially this recession, and they're freaking out. Well, why everything's down? Well, that's definitely a good thing, at least for folks looking to invest, because you're able to buy good quality companies. Not all good companies are good quality companies, but doing your due diligence, looking into it, making sure it's something that you understand, something that you trust, you understand the market, you understand their products or services that they offer, all that. You've looked at the balance sheet, which only takes just a little bit of time. It amazes me. That's another reason why a lot of people don't get into the stock market or don't invest into the stock market. They don't understand it. But you have a person that's going to look for a car or a truck, to purchase, whether new or used, and they'll spend, a couple of weekends going to this dealership and that dealership, or hopping online and, getting on their financial institution's website, or Googling a payment calculator to put in the terms. And there's a whole lot of research going into it. They could tell you most of the features on the vehicle that they narrow it down to. And I mean, and I say that to say it's all about what's important to you and what you put your time into. You take that 10, 15, 20 minutes or what have you, just look into these companies, so you can gain a better understanding of if it's really a good buy, what that business is about, what the industry is doing. But it just amazes me sometimes some of the things that people choose to put their time in, but you get a barrage of excuses for others. Why not take a little bit of time and do your due diligence and your research into something that will make your money work for you, versus we'll spend tons and tons and tons and tons of time researching something that's decreasing in value consistently over the life of its you operating that particular vehicle. So just wanted to throw that out there. But anyway, let's hop into it without further ado. So first on the list as it sits, just a quick reminder, we're at $4,543.64. On the week, we are up 0.58%. On the month, we are down 0.41%. And across the 3 months, we are up 1.25%. So, and again, that's short term. Investment is all about the long term, being patient. This is a crock pot, not a microwave, for real. But we'll dive into it. So I did add some shares and increase my position with new residential investment. In its totality, I purchased 12 shares. And on this particular stock for the week, we are up 4.27%. On the month, down 7.89%. And across the 3 months, pretty much a lot of things are down horribly. We are down 67.89%. But this is a company that I will absolutely, and you can watch any of my previous videos. I've talked about this particular stock on every video. I love the way the company's set up, the way it operates. Even the leadership is strong. Just this pandemic has taken a tremendous effect on most businesses and most industries. But this allows me to buy in cheaper. As you see, it sits at $5.25 right now. so I can lower my average across time. So I will definitely look to increase my position now with the company and moving forward. I'm sitting at 100 shares. And again, I am down. Total return 23.69% or $163.01. Again, this is a dividend paying stock. Now, they've sort of increased. Well, this particular company, if you look across the payout history, it typically averages around 12% dividend yield payout. So I definitely look forward to things normalizing at some point in the future. And again, for me, it's just probably, I'm not looking 6 to 12 months. I'm looking more long term for the entirety of my portfolio to bounce back. But maybe, you know, 1 to 3 or 3 to 5 years or even further for things to truly normalize. It may not necessarily take that long, but my expectation is that I'm patient, with investing. So now you will notice there's a $5 dividend payout pending for May the 15th. So with that dividend payout, and this is just a real life example of why I love dividends. I'm gonna hopefully have that drip feature added to my account again by then at some point. But if not, it's okay. I'll just manually reinvest those $5. But this gives you a breakdown of sort of how that works. As of right now, because of everything that's going on with the pandemic, or have a 5 cent dividend on each share. So at 100 shares, 100 shares at 5 cents, of course, equals $5. Now, what you will notice, of course, in normal times, they average right around 50 to, let's say, maybe 55%. They were increasing on Q4 of 2019, but typically, so you'll see, I'm looking forward to seeing that dividend increase in size as things start to normalize and I increase my position with the company. So that's just an example, a real life example I want you guys to see of how that dividend payout works. And again, this particular company pays out on a quarterly basis. So the next stock, and this particular stock is actually new to the portfolio, American Airlines. And guys, if you haven't already, go ahead, like, subscribe to the channel. I like the video, subscribe to the channel, and please go in and check out, my previous videos. Here you'll just see me. I'm silly, I'm funny, I love to enjoy life. So you will see the videos for my Robinhood journey, which, like, for example, the one I'm currently doing. But you'll also see some funny videos, I think, in this time, and I think just in life, no matter what's going on, we all have to laugh and enjoy life, and we all need laughter. So you'll see some funny videos on my on my YouTube channel as well. So check me out, subscribe if you haven't already. Go check out my all my previous videos. Hopefully you get some value out of those as well. But American Airlines, and if you guys hit me up in the comments and let me know if you guys want me to do a deeper dive into these companies. I'm gonna try not to make this video too long, so I don't want to go an extensive dive into each one of these stocks that we cover, to include the 3 new stocks I've added, the current stock that we're already in the portfolio, and at the end of the video, the 5 stocks I'm looking to buy here in the near future. But let me know, hit me up in the comments and let me know, if you'd like me to take a deeper dive into my thinking and sort of why I feel these are great opportunities to buy, or if there's a particular stock that you have questions on or you'd like me to do a review on, hit me up and let me know in the comments. But American Airlines, they are set up pretty solidly from a business standpoint. I think they're one of the better companies in the industry. Of course, with the pandemic, everybody's taking a hit. But again, this is not a short-term, I'm not looking to buy low and sell high. Typically you'll do that with, again, this is a dividend paying stock. So typically, again, you have your growth stocks and you have your dividend paying stock. With your growth stock, those are stocks that do not pay out dividends. Typically what you'll find with those is that's where you'll get those larger wins, like an Amazon, for example. You buy in at $177 or 200 something dollars. You be patient, you wait, and next thing you know, the stock's per share is over $2,000. So you can get that ridiculous return. Typically you'll find that with growth stocks, meaning they don't pay out dividends. But for me, in this particular case, I think Obviously, there will be an opportunity to take advantage of the growth of the stock, and that's the sort of good thing about dividend stocks. You won't see those dramatic opportunities like you do with growth stocks, but you will be able to realize that growth and opportunities, especially in any recession or a bear market like we're in now. For example, if you look at it, it's sitting at $10.34 currently. Back in February, it was trading for $30, and typically you'll see with this company, even with there's been ups and downs throughout, tests of time, essentially. So I do think it will normalize. And this is, I'm not looking again 3 or 6 months or 9 months or a year. I'm looking down the road 3 to 5 years or more. Just being patient, but building up my position with the company. So when that rebound does come and the value of those shares go up, I'll be able to realize that growth of that stock. In addition to that, having them paying out a dividend. So anyway, so I bought 15 shares. As it sits now, my average position or average cost is $11.61. Total return so far, I'm down $19.04. And again, I'm not worried about that. I will continue to increase my position with the company because, again, it's a long-term buy. And as I mentioned, dividend payout for this company. Some companies are suspending their payouts, and if you look at the history of the payouts with a lot of these companies, actually all of these companies that I have in my portfolio, they're very strong. Keep in mind, these are very, very, very unique times that we're in. So you may see companies cut their dividend or suspend their dividend temporarily. So I also take that into account in terms of just keeping that in the back of my head. But for me, it's more long term. I'm not necessarily looking for them to pay me out a dividend right now. It's a recession, and the pandemic's going on, so it's a horrible time for a lot of businesses across the world. So I'm not necessarily looking to realize that immediately, but across the space of time. So again, I will continue to increase the position in this American Airlines stock and company. So next we'll go to Tesla. I did add 1 share of Tesla. So that brings me up to 2 shares of Tesla. My average cost is $548.70. My total return currently is $354.40. And of course, Tesla is a growth stock. It is currently not paying out a dividend. I just absolutely believe in the company, and the absolute competitive advantage they have over anybody else is ridiculous. So we'll move to the next one. But again, like I said, if you guys would like me to take deeper dives into these companies, just hit me up in the comments. Let me know. The next company that I increased my position in is Aurora Cannabis. And of course, this is one of the marijuana companies I'm investing into, a Canadian-based company. I did go ahead and purchase 118 shares, which takes me to 668 shares, average cost of $1.06 per share. Currently, I'm down $218.70, or roughly 31%. This is very long term for me. I'm thinking for this maybe 3 to 5 years, maybe 7 down the line. So, and I will be looking to increase my position with Aurora Cannabis as well. Just do that progressively over time. Again, my primary focus is increasing the dividend portion of the dividend portfolio. The bulk of this will be a dividend paying stock. But again, you do your homework, you research a company, and you can see growth and potential in the future for whatever reasons or dots that are connected for you. I say take your shots, even with the growth stock. Take your shots. Be calculated in it, but go ahead and take your shots. The next is Realty Income. So Realty Income, again, I talked about this in my last video. I love the way they're set up, the outlook of the company, the performance of the company itself, the consistency of the company. And even if you look at the history of the dividend payout, it's really, really solid. So I went ahead and added 3 shares of Realty Income, which takes me to 5 shares total. Average buying cost, $50.65. Total return thus far, I'm down $3.65, or roughly 1.5%. I will absolutely look to increase my position with this company moving forward. And this is, again, a dividend paying stock. And this particular company pays out on a monthly basis. So the next share, and this one is another new one, the second new company added to the portfolio, which is IBM. IBM itself, with the way the world is now, all the craziness, but the expansion of businesses and a lot of businesses are leveraging the technology nowadays, even trying to secure and shore up their technology and their infrastructure. So this company will always have a great opportunity in the marketplace. So for me, if you look at the performance, the assets, even the overall balance sheet, even the dividend payout, history of the dividend payout is absolutely consistent. So you look for that, and you look for that growth in terms of them increasing the dividend payout. But another important thing is what that's costing them. And like I said, if you want me to do deeper dives into these, hit me up in the comments, let me know. But you look to see how good a company is managing their money and their stewardship, because that's applicable to companies as well. If you're looking to invest into a company, you don't want to see a company spending a whole lot of money and having very small margins. That's not responsible. But if they have a good or reasonable margin, you know that the consistency of that dividend payout is a lot more likely moving forward, regardless what the conditions are in the market. All right. But I've been looking for a long time to have an opportunity to invest in IBM. With the craziness going on, unfortunately, it's brought great value right now. This stock is heavily discounted right now, and it's a solid company. Just to give you an idea, let me see here. On the 21st of February, it was trading $149. This is just a very consistent, solid company, and as you see, the consistency there, and then across the 5 year as well. And of course, you'll have dips and peaks and valleys, but IBM is just a great company to have. And again, a dividend payout, dividend paying stock. So we'll move on to the next one. Now, the next one is also new to the portfolio. And of course, that is Boeing. Just to give you a quick snapshot of why I've added a position and will continue to increase my position with Boeing. Boeing is absolutely essential to the U.S. economy, point blank. And not only to the U.S. economy, but it has a huge effect on the international level as well. A lot of people are sort of familiar with Boeing for their commercial airline space, meaning they make a lot of the planes for a lot of these companies like your Southwest, American Airlines, Delta Airlines, etc. Obviously, with the pandemic going on, that entire industry has taken a huge hit. So, but Boeing itself is essential, again, to the economy, so much so that you saw the White House showing their understanding of how important Boeing is, and ensuring that Boeing would have that assistance and help if they need it. Now, currently, they haven't taken any money from the government, and they bail out essentially taxpayers, us. But so that lets you know, even in this pandemic, they're set up pretty strong. But the government has assured them, hey, we will be here if you need it. Again, not just the commercial space, because they're one of the two only major contenders in terms of producing airplanes. And they do that, here in America. Now, the other big company is Airbus, which is a European-based company. But those are your two your two individuals that occupy that space, and there are not a lot of competition in that space because it's so expensive. The buy-in is absolutely ridiculous. So, but again, the U.S. can't let this company fail. One of the other aspects of the company, they also is the defense contracts, vehicles for our defense, as well as weapons for our defense. So that's essential, and they are the number one player, hands down. So that's just yet another reason why the government can't allow this company to fail. And then lastly, on an international level, and the third section or sector that they're involved in is providing engineering guidance on an international level, which it just further broadens their portfolio and their reach. But Boeing itself, and another reason why they can't let Boeing fail is because Boeing itself, you would potentially lose millions of jobs because Boeing itself deals with tens of thousands of suppliers themselves. So, in addition to all those suppliers, a lot of which are heavily dependent on Boeing and that them needing the supplies and creating that consistent revenue for those companies. So, all those, tens or hundreds of thousands of jobs on top of the actual Boeing employees themselves, that would equate to millions of jobs lost. So again, that's how essential this business is to the economy. So I did go ahead and buy 2 shares of Boeing, average cost of $136.50. Currently, down $15 or roughly 5.5%. So I will absolutely look to continue to increase the position with Boeing for sure. Now, just quickly, I wanted to jump down to the 5 stocks I will be looking to add here in the near future and moving forward. And the first one is Southwest Airlines. I think there are a couple of airlines that have good quality products, and this is one of them. And they also do pay out dividends as well. So the next stock, real quick, is PowerShare S&P. So this... when you want to talk about diversifying your portfolio, this does exactly that. But what it's doing is it's taking the 50 least volatile companies out of the S&P 500. So meaning out of the best 500 companies, and they look at high dividend yield. They take the top 50 from that group and spread your investment across those top 50. And again, it's focusing on essentially the 50 best high dividend paying yield companies. So I think that's always going to be a very wise thing. And I'm definitely going to look to, this is one of the bigger ones that I was excited, looking forward to in terms of adding to the portfolio. British Petroleum. Again, if you guys want me to do a deep dive into these, just let me know, hit me up in the comments, but I'm going to speed this up. It's already a long video. Also, Pepsi Cola. I know a lot of people focus on Coca-Cola, which I do think is a great buy and a great company to invest in. However, I will say when you look to compare the two, to me, it's not really much of a comparison. If you look at the market share that Pepsi Cola has versus Coca-Cola in the beverage and in food industry, to me, it's not comparable. If you look at the revenue generated by Pepsi, the quality of products as well by Pepsi, it's a little bit more diversified, in my opinion. But it's if you just look at the numbers and the production between the two companies, it's not even close. And lastly, absolute great opportunity. And as you see, they have already been in the news with participation of production of products now to help in this pandemic. It also pays out a dividend. But if you look at not only the dividend payout, the history of the dividend payout, but the history and performance of the company itself, and even currently financially, they're set up amazingly. So good, strong leadership. So I'm excited to add this to the repertoire. So good people, I definitely appreciate you kicking it with me. I apologize if this video is a little bit longer. I wanted to just give you guys a quick update, but also throw in some additional information. For me, I don't know. I think you can hop on YouTube and check out, 5 stocks that people are buying. But what people should be doing and what you should be doing is focusing on gaining tools so that you can understand how to find those good values and good stocks and good investments yourself to make an informed decision. But just blindly following somebody else just because they say, hey, that's what you should do, and taking an L has a whole nother taste in our mouth. So, but good people, I appreciate you continuing to rock with me. I will be probably in the next day or two putting out yet another exchange with the president. But thank you guys again for rocking with me. I look forward to you guys coming along and us traveling down this Robinhood journey. Hopefully seeing this investing balance grow and grow and grow over the long term. But people, during this time, man, peace, love, and happiness. If you can, keep your ass home. Not only for ourselves, but for the communities, for family and loved ones. Just be safe out there, whatever you're doing. Good people, until next time, I'm out.